Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin, Ethereum, Cardano, XRP, and gold. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, guys, currently it's 5:09 p.m. Eastern time. The price of Bitcoin is at 104,364. And yesterday we had a very big crash to about 100,000. So let's hop into the charts. Let's see what's happening. Start off with the 2-week chart. This closes in about 2 days and 3 hours. The stochastics are looking good. They look to go up. So this is giving me confidence that maybe we could get a move up soon, but we are far away from the 21-day moving average, which is at 88,194, and we do have a red engulfing candle so far. Now on the weekly chart, the stochastics are toppy, so it's hard to say if we are going to roll over right away or if we're going to drag here. That would be the best case scenario. We're not too crazy far away from the 21-day moving average, but it is at 94,358, so we're basically $10,000 away. After yesterday's drop, you can see that we wicked back up, so that's a little bit bullish, but we still have 2 days before this candle closes. On the 3-day chart, stochastics are still on the way down. We're getting there. We're not too far from the 21-day moving average. Is at 97,913. If we look at the 2-day chart, still down. We're still going to have to stay here a little bit before we could roll back up, but we are below the 21-day moving average. This candle closes in a day and 3 hours, so let's see what happens. Well, last candle we were below the 21-day moving average. Now we're currently above it, but not by much. The RSI here is pointing up, so that is kind of bullish. Now on the daily chart, the stochastics are low. They were rolling over. We could still continue to drag here for a little bit, but at least they should be turning up at some point. What's bearish here is that we are below the 21-day moving average. 1, 2, 3, 4, 5, 6, 7, 8 candles in a row, and today's candle closes in the 2 hours and 45 minutes. This might be the 9th candle in a row that is below the 21-day moving average. Now if we put it on the patterns here, I gave you guys this bear flag a couple of days ago, and as you can see, exact measure move to the 50-day moving average, and I had the theory that it's possible that we touch the 50-day moving average and from there pop back up, and that's exactly what we have done so far. We have popped back up, but we are still below the 21-day moving average. As long as we're below the 21-day moving average, we have to remain kind of cautious and a little bit bearish. Now I'm gonna take off this pattern because this already played out, and now the new pattern that I am seeing that is bearish is head and shoulders. This is the shoulder, this is the head, and we just made the right shoulder here, and the measured move to this is from the top of the head to the midline here. And if we put this here, it pretty much takes us to the 200-day moving average, which is at 95,184. If the stochastics can't come back up, this is pretty much where I see Bitcoin going next, which would be bearish. Now a scenario that I've been saying is that we bounce up from the 50-day moving average. Now what could happen is we continue staying below the 21-day moving average, but we kind of go sideways. That'll give chance for the 50-day moving average to continue going up, and for the 200-day moving average to continue going back up, and possibly by the time we touch the 200-day moving average, maybe it's around 100,000. Now in another bullish pattern that I have, as you can see here, I have it in a falling wedge, and yesterday with that bear flag we went below the falling wedge, and then today we're coming back into the pattern. So this is what I'm saying. If we continue to go sideways and maybe continue dropping down, by that time maybe this line will move here, and by the time the 200-day moving average touches this pattern, we're at 100,000. We don't have to go all the way to 95, and from there now we could break out to this measured move, which is currently at $112,000, possibly a little bit more. Something else that looks a little bit bullish is that the RSI turned over, and now it looks like we're on the way up. So with the RSI pointing up, the stochastics looking to turn over, we're back into the pattern. We touched the 50-day moving average. Like I said, it's possible that maybe we might get bullish again. Let's see what ends up happening. Another thing to look out for is that the 80-day and the 100-day moving average are below the 200-day moving average, but as days keep on going, they're eventually going to cross the 200-day moving average, and everything's going to be in order. You're going to have the 21-day, the 50-day, the 80-day, the 100-day, and then the 200-day moving average. And when I see all the lines like that in order, that usually gives us a bullish push. Now we look at the 22-hour chart. Stochastics are looking to roll over a little bit. We are below the 21-day moving average. On the 8-hour, stochastics are pointing up, but we are below the 21-day moving average here still, which is bearish. On the 6-hour chart here, I told you we need to make sure we stay above the 200-day moving average, which we did. We fell all the way down, bounced back up. So, and the stochastics are also pointing up. So right now, this is our next safeguard is 100,374 with this 200-day moving averages. If we lose this, it's going to get a lot bearish. Now, the 4-hour chart, I spoke to you guys about if we lost the 200-day moving average and the 21-day moving average here, I have to get bearish. And that did get me bearish. And I gave you guys two scenarios. Either we were going to go sideways here, create a bear flag, and then go down, or we were going to V-shape recover. And that's exactly what we did. We got back above the 200-day moving average and back above the 21-day moving average, but then we lost it. Now we're trying to see if we could reclaim it. Currently, we are below the 200-day moving average. If we cannot close candles again above the 200-day and the 21-day moving average, then we could continue being bearish. Even though this is a nice move up, this looks like tweezer tops, we could easily fall back down, probably come back up with a double bottom W pattern, or who knows what could happen. But we need to close candles above here. We cannot close candles above here. I have to remain bearish. Currently right now I'm neutral to bearish because we have to make sure we get above these moving averages. If not, there is going to be more downside, I feel like. And here on the 1 hour, I was also telling you guys we need to get above the 21-day moving average and above the 200-day moving average. We have not been able to maintain good strength above the 200-day moving average. Look at this, we fell below. We had a lot of candles green all the way back up to the 21-day moving average. Then again, tweezer tops, now we're below. The only thing is that we are above the 21-day moving average, which is at 103,728. Stochastics are on the way down. The RSI looks like it wants to also flop over. So unless we can maintain this, I have to stay still bearish on Bitcoin for right now and think that we're going to be hitting 100K, possibly 98, 95K. All right, guys, let's head over to Ethereum. And on Ethereum, if we start off with the weekly chart, stochastics are getting high. This is bullish on Ethereum for me, is that we are above the 21-day moving average, above the 200-day moving average. We are kind of like in a flag pattern here, but we haven't been able to get good strength yet. So hopefully we could continue going sideways and then we could finally break out from here. Currently, I have the weekly in a falling wedge that would break us out to 3,400. I also have this in a flag here that breaks us out to 3,400. So we got that going for it. If we were to lose the 21-day and the 200-day moving average here, then I have to get bearish also on Ethereum. We head over to the daily chart. This is the thing that keeps me bearish still, is look at this. We tried breaking the 200, came back down. Try to break the 200, came back down again. It's been 4 times already, and we haven't been able to go above the 200-day moving average, and now we just lost the 21-day moving average. And the stochastics look kind of weird here, like where they want to roll over. So it looks like we kind of want to go to the 50-day moving average, which is currently at 2,229, and Ethereum is right now is around 2,500. So with all these rejections, this 50-day moving average does look possible here. Head over to the 8-hour chart. The stochastics are starting to turn back up, so let's see what happens. But we are below the 21-day moving average. That's bearish. And the 4-hour chart, we're above the 200-day moving average, so this is our last line of defense, just like Bitcoin. But look at this, we have a wick that pushed us down, so we have to see if we can maintain above 2,458. If not, that's going to open up the possibility for 2,200 or lower. We must get above this 21-day moving average as soon as possible. And the 1-hour chart, we're holding up on the 21-day moving average, but we need to get above this 200-day moving average as well. Now, something that I see happening here that could bring us down is that this kind of looks like a bear flag-ish here. And if this were to play out, the measured move does bring us down all the way to 3,300, which kind of correlates with the other time frames that want to kind of bring you down to 2,200. So let's see what ends up happening. I'm going to leave this pattern here so we could take a look at it in the future to see what ended up happening. But all in all, we have to get above the 200-day moving average here on the daily to remain bullish for Ethereum. If not, we're going to fall. And again, remember, the altcoins are dependent on Bitcoin. If Bitcoin starts falling to 95 to 90, consistently below 100K. The Ethereums, the Cardanos, the XRPs, the Doges, all those coins are more likely to fall as well, and probably fall down even harder. Let's head over to Cardano. And on Cardano, the weekly chart, the stochastics are looking to roll over. We never even made it all the way up here to the top, so this is already bearish. I do have this in a weekly falling wedge as well, which would break us out to about $1.52. Let's call it $1.50 just to have more simple numbers. We did break out of the falling wedge here, but we were never able to get above the 21-day moving average. And with this weekly candle, if we close it bearish, it looks like we're going to be closing below the 200-day moving average. This opens us up to go back down to the bottom of the pattern, which would be all the way at 41.42 cents. And with this stochastic rolling over, is not looking good. We take a look at the daily chart, below the 200-day moving average, below the 21-day moving average. You see, at least in the Ethereum, we were above the 21-day moving average, and we were trying to get above here on the 200-day moving average. But here in Cardano, we lost both of them here. And you know, we're getting a reversal candle here. The daily stochastics are low and they look to be on the way up. This looks like tweezer bottoms, and we could get back up. So let's see what happens. The 200-day moving average is currently at 83 cents. So let's see if we can make it back up there. We take a look at the 8-hour chart. The stochastics are turning over. They're trying to go back up, but we are below the 21 and the 200. We're below those averages. We cannot be fully bullish here. Again, on the 4-hour, we lost a 200-day. We lost a 21-day. We're rejecting off the 21-day moving average as well, and we're starting to get a little toppy here. So it's not looking good. It looks like we could end up falling back down to the bottom of the pattern. So we need to break this 200-day moving average on the 4-hour sooner than later, and that's currently at 73 cents. So let's look out for that. If we can't get back to 73 cents, then I'm seeing us going back below 60 cents at some point, again, especially if Bitcoin does drop. Now going to XRP, we start off with the weekly here. I do have this in a falling wedge that would break us out to approximately $3.29, $3.30, let's call it. I also have it in a smaller falling wedge that would break us out to about $2.71. But the stochastics here on the weekly are also rolling over just like Cardano. That's not looking good. We are below the 21-day moving average. That is also not good. This looks like a topping tail here as well. We have momentum going up and now we're losing it. It's possible we could come all the way down to this 50-day moving average, which is at $1.60. Going to cause a lot of pain for XRP. On the daily chart, stochastics also look to roll over, and we are below the 200 and the 21-day moving average. Red engulfing candle. We're making it back up here today, but it does not look like we're going to be getting to the 21-day moving average, especially with the stochastics rolling over. The RSI here does look like it wants to go up, so maybe that could end up saving us. On the 8-hour chart, stochastics look to go back up, but we just lost the 21-day moving average. We're below the 200. That's bearish. On the 4-hour chart, below the 200, below the 21. We're actually below all the averages here. Stochastics look to go back up, but that might just be enough to test the 21-day moving average, and maybe we fall back down. So the 200-day moving average is currently at $2.30. So even if we do pump up to 230, unless we can establish ourselves above that, I would have to be bearish on XRP as well. So far right now, overall, I'm currently bearish on the altcoins. They haven't shown us anything. Ethereum does have to get above that daily 200-day moving average, and then that will give confidence to the rest of the altcoin market as well. But it's all really dependent on how Bitcoin does. Bitcoin falls, altcoins are gonna fall harder. Now let's head over to gold. And on gold, I've been telling you guys, we are kind of like neutral bearish on gold. I don't really see it making a huge drop all the way down. I feel like we are going to be going sideways. So that's why I drew this flag, and as you can see, it's been following the flag exactly. We've broken out a few times, but we come back into the pattern. Gold right now is 3,322. If we break out of this flag on the weekly, it should take us to about 3,745, 3,800, around there. Now the stochastics are still low. Might take a few more weeks before we could roll back up. We head over to the daily chart. The stochastics are high. They look to come down. I did draw this inverted head and shoulder, and so far it's been playing it perfectly. And we broke out of the pattern. Currently with this daily candle, we're on top of the pattern, and we are above the 21-day moving average, which is at 3,295. But if we go back into the pattern, the bottom of the pattern is basically at 3,000 3,247. So I just continue seeing us going sideways here until we could break out. Maybe this inverted head and shoulders will break us out. Let's see what ends up happening. For this to be invalidated, we definitely have to go below the head. So as long as we could stay above 3,175, I would say this right shoulder would still be valid. So we still have to give it more time. 8-hour chart, stochastics are on the way down. We're below the 21-day moving average, and on the 4-hour we're below the 21-day moving average as well. We have 1, 2, 3, 4 candles below it. Stochastics are dropping. We could stay here a little bit before we turn over, and we're testing the 200-day moving average right now at 3,301. If we lose that, the next logical one would be here, the 6-hour one, which is at 3,258. So still for gold, I see us ranging still between 3,000 all the way to 3,500 until we get a strong enough bounce that will take us to the 3,800 range. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.